Good morning, everyone. Welcome back to Weekend Commodities Update video. And I hope you guys are having a good weekend. And let's take a look at natural gas and UNG, as well as US dollar, oil, gold, and silver. So we're looking at their support and resistance levels, as well as where price, most likely scenario, price we're heading into later next week. All right, so let's take a look at NatGas NG on a daily time frame and at the adjusted contract, making it make sure there's no contra gaps. And we felt that inverse head and shoulders. Looks like it. You can see this was the left shoulder, this was the head, and bulls gave it a try. We bounced to here and couldn't even break the prior high, and then we pulled back. So that was the first rep flag. When Tuesday we didn't make a new high and rejected from that level, so we can't get over Thursday's high, meaning that's a lower high, lower than the previous high. And then the next red flag is when we broke Monday's low. So that means lower high and a lower low means a daily downtrend is confirmed. So back to bear mode. So bears are back in full control because on the weekly chart, we're talking about this as well, that it was a weekly bear flag potentially. And pretty much it ended up being a weekly bear flag because you can see from top of the move to the bottom of the move, we barely bounced over 30%, meaning as long as it's below 38.2%, this yellow box of the bounce, it's a bear flag. So how it works is that we measure from the top of the move, which is right there. And you can see every candle is a straight candle, none of the bounce above. So to the bottom of the move, this was the bounce. So this bounce only bounced about roughly 30%. And then we just rejected from the weekly EMA 12 and then start bear flag. So it's not a confirmed bear flag yet because we need to break prior low to be confirmed bear flag. But a characteristic of a bear flag is usually it chops around in the area and it tightens up, and then it will decide which way it wants to break. So if this tightens up and then it breaks bear, then they're gonna try to go for this this low, this weekly low. And if they negate it, the bulls negate it, and then broke bull, then we have a chance to potentially head higher. So right now it's just tightening up on that flag at this moment. On the weekly chart, it's going to take a while because each candle is going to take a week. So we just take a look at the daily chart for more shorter term potential shorter term moves here. So right now, pretty much bulls, you want to hold this low, this all-time low. There's really not that much support other than this $2 support psychologically, where we kind of held it, but barely. Overall, you can see even on the hourly charts, it's not looking that great either. So bare minimum, if we want to see $2 hold, I want to see at least bare minimum from the bulls an hourly uptrend confirm, meaning a higher low and a higher high for that to even. So we need a big enough bounce and then form a higher low and then form a higher high from there. We don't even have step one yet. This is not even a bounce. So we have to see if bulls are actually serious about holding this $2 when the market opens Sunday night. If not, then we're probably going to look down closer to this all-time lows. And if we break this all-time low, then we're looking at this black line where they're going to be their next target or continuation downside. So those are the two scenarios. Let's see, 7%. Yeah, that's pretty doable. We're not that oversold on that in terms of the RSI. So bears can definitely take it lower. So stick to the trend. As long as the trend is in a downtrend, bears will probably take it lower. The first step is to get that big enough bounce to even consider getting at least an hourly uptrend. Back to bull's favor at this moment. All right, UNG, similar idea. If NatGas decides to break the $2 range, then UNG is probably going to come down to test the low of this level. Bounce, 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 bounce. And then if NatGas breaks low, UNG will probably come down closer to this 12 range. So quite a bit away. So we'll take it one step at a time. If NatGas decides to bounce at that $2 mark, then UNG will likely bounce here as well. All right, and if you guys want to support the channel, feel free to go to my Patreon link on YouTube, and as well as it's a free 15-minute call if you guys want to learn more about coaching and how to do technical analysis, all that kind of stuff. Let's continue with the dollar. So the dollar, I talked about this many times past couple of weeks where fundamental outweighs the technicals, right? You could say literally everything is oversold, right? Weekly, daily, 4 hour, 1 hour, any time frame is oversold, and you could be like, we're probably going to get a bounce. But I said that fundamentally, if we're getting rate cuts, dollar is just going to keep dropping. So the more rate cuts we price in, the more weaker the dollar is going to be. And regardless of how strong that technical level support is, it won't matter. It's just going to blow through it. So we're talking about this for 2 weeks. And ever since we broke bear from this tiny range that we've been watching for many months, I don't even know how long, maybe over half a year or a year. We finally broke bear here. And once we got that confirmed rate cut, I'm pricing in more rate cuts. And then now we're just pricing even more rate cuts. We'll see. We're actually getting it. I think it was on September 18th or something. But it's coming up in like 3 weeks. That rate cut. And right now it's priced in a 0.5 cut and 50 basis point. So we'll see. I think it's like 30% of a 0.75 cut at this moment priced in. So if that keeps on increasing, US dollar is probably going to head lower. Are at this kind of like little small support right here, right at that spot, but I don't really. We might get like a tiny bounce, right? There's supports here as well. So we bounce here a little bit, but as long as it's trending on the below the EMA 12s on the daily time frame and downtrend intact and rate cuts are coming up, I don't really see us getting like a bounce where we come up higher or anything. Maybe like, lower highs, lower low, lower highs, those kind of bounces. So, all right, let's take a look at oil. Oil just can't be more beautiful equilibrium than anyone can expect. Been talking about this one for years, and it's still exactly the same. Resistance, support. Literally play this bounce, and then play the short, play the bounce, play the short, play the bounce. See how this high doesn't get above this high, and then we play the short, how this low doesn't get below this low, how this bounce doesn't get above this bounce. Similar idea, still tightening up. You can see how this low doesn't get below this low. And we bounced. And it's a bit harder to play it as it gets too tight, right? It's going to get super tight now. But you can also wait for the break of the tightening range, right? Once, let's say we break bull here and you see this volume coming in, increasing volume, then you can go on the bull side versus, or a bear break, right? You can go and play both sides once it breaks. So super clear, no fake outs on oil, and just continue to tighten up until we see the break of the tightening range. And gold all-time highs, no signs of red flag yet either. I talked about this where this is a resistance and we want to see a back test, bounce off of it. So pretty much back test, bounce off of it, EMA 12 as well. And the back test also back test at this level. You can see resistance, resistance, resistance 3 times. Now acting as support, right? Bounce off of here, test, bounce. No signs of red flag for metal bulls and continue to stay with the trend. So as long as it's a daily uptrend, keep things simple. I always talk about keeping things simple for trading. You don't need a million indicators. Trading is already complicated enough. So follow the trend. As long as the trend is an uptrend, don't fight the trend. Because the very first step for bears is that they need a big enough drop. Then they have a chance for that pivot, lower high, and to form the lower low. We don't even have that first step for the bears yet, right? They need maybe something like this, like a big enough drop like that, potentially even shape something up. And then they need to follow through from the downside too. So not even the first step from the bears. So just keep on playing the trend. All right, so silver is catching up a little bit, but still a lot weaker than gold. Gold is trading close to all-time highs, while silver is not. And we may probably get some resistance over here, getting close to it, which is around this 30.5 range. So we come up to here around Tuesday, which is going to coincide exactly with this top, which is that top is exactly this bottom. So that's going to act as resistance if we do come up to it. And if we reject from there, then we can probably just continue to chop around here, this level. But if gold skyrockets, breaks all-time high, and we get like a big candle, a huge breakout, then silver will probably touch this level as well. Pretty exact, actually. Let's see. 3% move. Yeah. So we get like a let's say like a 1.5% move on gold, and we break out like this, and silver will likely hit this resistance right at this spot. So we'll see how it trades when it does hit resistance. Last thing you want to see is hit resistance, and the next day it drops like a huge candle on the red. We just wanted to see like a slight red candle and then a retest, back test, and breakout. That would mean that gold will have to go like that, breakout, and a slight red day, and then continuation for that silver to break out as well. We'll take it one step at a time, and if it does, we will see it coming. All right, that's got it for you guys. Have a great rest of you guys this weekend, and if you would like, share, and subscribe, you guys, or comment below if you guys have any questions, and we'll see you guys next week for more